right. Hi, everyone, and welcome to the daily currency call presented by Forex Trading Asia. It is the 8th of September, and it's episode 371 already for the currency call. Now, if it is your first time here, a big welcome and thanks for coming back if you are a regular viewer of the currency call. So just a quick introduction. If you are new, this currency call is presented Monday to Friday at 11 a.m. GMT +8 time zone, and we analyze the currencies as follows. So on Monday, we do the Aussie and Kiwi. On Tuesday, we do the Euro. On Wednesday, today, we're doing the pound pairs. Tomorrow, Thursday, we're doing yen and gold. And then on Friday, we're doing the CAD and cryptocurrency, Ethereum and Bitcoin. And crypto is presented by Daniel as well. So this is the currency call where you'll get market economic updates, key economic updates to pay attention to as well, and what the data actually means as well, and how to respond to that with trades or potential trades. We also discuss key support and resistance levels, and sometimes we'll also share bonus educational material in this call that is also featured in the Traders Club as well. But again, those are bonus features and not necessarily happening that much at all. So this is the currency call, and it's going to be very beneficial to both the long-term investors and also the short-term traders as well. We'll discuss what could potentially move prices, potential targets and risks, and also potential trade ideas and setups. One more thing to consider, please, that is important as a risk disclaimer. Any information shared during this call is just the views and opinions of the speaker, and it is just their opinion. So please remember to do your own analysis before you enter any trades. So what we have first up here, guys, we have currency strategist at LCMS, Gim Hong, and he'll be presenting his review on how the RBA meeting went yesterday and obviously what happened there, and also the ECB monetary policy meeting upcoming tomorrow as well. So get informed, guys, and enjoy. Thank you, Gim Hong.
Thank you, Scott. Okay, RBA. Wow, action-packed, I would say. Okay, so as mentioned during the prep video, okay, the RBA held interest rate unchanged at 0.1%. More importantly, okay, they actually proceed with the tapering, QE tapering, okay, at a rate of so QE at the moment, okay, at the rate of 4 billion Australian dollars a week, okay, as opposed to the previous setting of 5 billion Australian dollars per week, okay. So it's a good thing, right? It's a good thing. So we actually see, Australian dollar strengthen for the first few minutes, no more than 5 minutes. That's all, okay. If you guys were trading, you guys know what I mean. After that, for the rest of the day, it was just downhill, okay. Why is that the case? Now, this is a bit of a, or rather, should I say, there's a term for it. It's actually called the dovish tapering, okay. Tapering is actually a good thing. Good in terms of, for the currency, okay. Tapering will eventually lead to policy normalization, which means it will actually strengthen the currency, okay. However, with a dovish term in front of the word tapering, it means there's some, I would say, some payback somewhere, okay. So what's this whole payback thing? Now, if you guys recall, since July, when the RBA actually, announced that they're going to carry out this tapering, they're going to extend tapering when it ends, like somewhere around right now, okay, early September. They are actually planning to extend QE by 2 months, okay, 2 months, from early September to early November, at a rate of, 4 billion Australian dollars a week, okay? Now, yesterday, QE did proceed, okay? But, okay, it will go on until at least mid-February. So what you're looking at right now is the statement released yesterday by the central bank, okay? Maintain cash rate, blah, blah, blah. As usual, maintain target of 10 basis points for the April 2024 Australian government bond. Not so crucial. This is the crucial part. Purchase government securities at the rate of 4 billion a week. QE tapering. Okay, to continue, the purchases at this rate until at least mid-February 2022. Now, this is actually a more dovish action, okay? So just to convince you guys, let's just go all the way down to the statement. Where is it? The board's decision to extend the bond purchases at 4 billion a week until at least February 2022 reflects the delay in the economic recovery and the increased uncertainty associated with the Delta outbreak. Okay, so prior to the meeting, you guys may have heard that, well, actually, in fact, I think 10 out of 16 or something like that. I think it was 10 out of 16 economists being surveyed by Bloomberg actually felt that, the RBA will be holding back QE tapering yesterday, okay? But no, they proceed with, the whole tapering. Instead, Governor Low actually extended it, So it's, it's like first thing, if they were to proceed with QE tapering for 2 months, okay, until November, and if by then the whole COVID situation has been contained, okay, back to triple or even double digits in Australia, okay, and the economy were to rebound strongly, then the central bank will have the flexibility to actually further revise the QE tapering, right? Maybe to 3 billion a week. Okay, so that actually gives them the flexibility, right? That's one thing. By extending the QE by 3 months, okay, all the way to February 2022, they are actually losing this flexibility, okay? So that's one of the bad things. In case, things were to turn out better than expected by November, they are not able to, revise their whole QE tapering plan, okay? So another thing, that's the first point. Second point, by extending this whole QE to next February, it actually kind of reflects I would say, a gloomier outlook, gloomier outlook on this whole Delta situation in Australia, okay, coming from the central bank, okay, which explains why we see a brief strengthening of the Australian dollar for the first few minutes, no more than 5, okay? If you look at a chart, M1 chart, no more than 5 minutes. And then from then on, it was just downhill, just going all the way down, against dollar, against the other major currencies, okay? So that explains why, for the time being, Australian dollar is likely going to face a bit of a weakness, okay, due to this whole dovish tapering action taken from the central bank. I would have to say Governor Low is smart on this, on this end, okay, because with this Delta issue coming, and with many experienced industry personnel forecasting, or rather, projecting that the central bank will be holding back on QE tapering, Governor Low managed to turn this whole thing around and say, you know what, we are going to proceed with a QE tapering, but instead, we're going to extend it, to sort of like hedge the next few months, in case things turns out bad, we will be safe. At least we'll be staying for 4 billion for the next 5 months. All right. So that's pretty much it for the RBA. The next meeting will be held on 5th of October. Well, personally, I don't think there's going to be much of a change during the next meeting. Okay, but who knows what's going to happen, right? So with that, let's just wait for the next meeting, and then I'll update you guys on what to look out for. All right. With that, I will turn over to the pre-ECB coverage. So the European Central Bank, okay, will be announcing their monetary policy decision tomorrow at 19:45 GMT plus 8. Okay, so recently, okay, or rather should I say last Tuesday, okay, we have heard from several ECB members, okay, specifically the hawks meaning central bank members that tend to be more hawkish, okay, whereas dove refers to the members that tend to be more dovish, okay. So last Tuesday we heard from several central bank hawks, okay, ECB hawks, specifically Robert Hausman and Klaas Knot. Not important if you know or don't know them, okay. So they actually said that the central bank should actually start tapering the quantitative easing. All right, why is that the case? because Eurozone economy has been recovering broadly as expected. Okay, that's one thing. Second thing, inflation outlook has actually improved. Okay, as you guys know, inflation has been rising quite high, okay, to quite a high level for the past 2 or 3 months. Okay, I think it was August 31st that they actually announced, well, actually data was released that the annual inflation actually hit a 10-year high of 3%. Okay, way above the ECB's target of 2%. All right. So, with all these hawkish comments made by the hawks, should we actually be expecting a quantitative easing tapering coming from the ECB this Thursday? Personally, okay, my view, unlikely going to be the case, right? First thing first. First reason, Delta variant is still an issue, okay? So, before I proceed, just to let you guys know, for the ECB, quantitative easing, there are actually 2 parts to it. The first part is the APP, Assets Purchase Program, which has already been, ongoing for God knows how long, all right? It was actually way before the COVID, the pandemic, when the pandemic hits, okay? So the first QE is the APP. Second part of the QE is the PEPP, Pandemic Emergency Purchase Program. As the name suggests, it's actually, a QE taken in place to, in response to the whole pandemic, all right? So, PEPP is unlikely, okay, going to be tapered at the moment, right? With the whole rising of Delta cases and things like that in the Eurozone, I think at the moment, around 60% of the Eurozone population has already been fully vaccinated, okay? But still, we have seen that somehow, for some reason, okay, Delta variant cases has been increasing regardless of whether, one has been vaccinated or not, right? So, the PEPP is unlikely going to be tapered, all right? And the PEPP is actually scheduled to last until next March. That means March 2022, okay? I think the total amount of bonds to be purchased under the PEPP program is around 895 billion euro, okay? As of now, I think during the last meeting, I think they said something like around 850 billion euros have been purchased already, okay? Equivalent of bonds have been purchased. So likely that, it's going to last at least through 2021. And, there may be a tapering probably end of this year or something on the PPP, okay? But as of September, PPP is unlikely going to be tapered. That's PPP. Now, what about the APP, Assets Purchase Program? Well, some actually says that, some market analysts actually felt that, APP may be tapered soon, if, maybe this month or maybe end of this year, okay? Personally, I feel that for September, it's unlikely going to be the case, all right? Yes, no doubt inflation has been rising, okay? Inflation has been rising for the past few months. Okay, let me just show you the data for the annual inflation data for ECB, for the Eurozone, okay? So as you can see that the most recent month over here, okay, we can see that, there's a sharp rise to the 3% mark, okay, which is very good, right? But the central bank is currently adopting a 2% target, okay, which is at this level where the mouse cursor is. So as you can see that, the 2% mark has actually been hit only in June 17 release. So it's only like 1, 2, 3, 4, 5, 6, some 4 or 5, 6 months ago. So it was just a recent event, okay, that inflation has starting to rise and hit the central bank's target, 2% target. So it is likely that the central bank, okay, will reiterate specifically, okay, the president, Christine Lagarde, reiterate that, excuse me, recent inflation is likely going to be transitory. Okay, it's likely going to be temporary due to transitory factors, okay, like rise in oil prices, rise in, used cars and trucks, vehicles and things like that, right? So the central bank will want to see more sustained inflation, okay, at a high level, before, considering a QE tapering to the APP, Asset Purchase Program, right? So it's, the ECB is actually very similar to the Federal Reserve, right? A few months ago when the Federal Reserve inflation start spiking up, market analysts comes out and say that we may be expecting QE tapering soon from the central bank, from the Federal Reserve, okay? But the Federal Reserve came out, Powell specifically say that all these are just transitory and things like that. We will want inflation. We want to see evidence of persistent inflation, okay, before we would consider talking about QE tapering, right? So this will likely be the case for the European Central Bank, okay? Now, that's the second point, waiting for inflation to be more sustainable, okay, before making a decision. The third point is this time around, okay, the quarterly economic projection materials will be released by the ECB, okay? So the central bank will probably want to wait for, at least one, which is this time around, or twice, or two economic projection materials to be released before, to have a clearer picture of how economic recovery in the Eurozone is going on, right? So speaking about economic projections, okay, during the previous release back in June, the central bank actually revised their economic growth projection upwards, okay, for this year. Inflation projection has also been revised upwards for this year, okay, but for 2022 and 2023 onwards, it's sort of like toned down, still way below the central bank's target of 2%. So with all these three points that I've given, it is unlikely, okay, that the central bank is going to carry out any tapering action or make any announcement on potential QE tapering, be it APP or the PEPP, okay? So roughly when can we expect, right? So like what Jean has mentioned yesterday, okay, I actually share the same view as him. Tapering announcement is likely going to take place only in December, when, like I said, like when the ECB has a clearer picture on the economic recovery. That's one. Second thing, hopefully Delta variant cases will drop significantly by then, okay? Third point, what's the third point? Third point, inflation has to be sustainable, has to be sustained at a high level, such that, when the transitory factors has resolved, okay, inflation will fall back to around the 2% target, which is the central bank's target, okay? So with that, yeah, unlikely the central bank is going to do anything this time around in September, okay? But take note that there will be a press conference at 20:30 GMT +8, okay? Normally, based on previous central banks, ECB's policy announcement during the 1945 interest rate monetary policy statement release, there's unlikely going to be much movements, okay, unless there's a significant change in forward guidance like the previous release. But this time around, unlikely going to be the case, okay? So if you guys are trading the ECB monetary policy decision, just take note of this at 1945, okay? However, if you want to trade, if you want to scalp, then look for opportunities, okay? Then try to do it at the 2030 time when the press conference is being released, because who knows what Lagarde will be saying, right? She may actually drop a hint or two on QE tapering and things like that. Now, that will actually, cause, I would say, movements in the euro currency, okay? So with that, I will update you guys on what goes down, for the ECB meeting on Friday, okay? Now, with that, I'll hand it back to Scott.
Thank you for that, Kim Hong. And just a quick little recap, guys, there were a few links shared in the chat as well. So I would strongly recommend click them, bookmark them, watch them at a later date as well. Make sure you subscribe to the YouTube channel as well that's been shared, and the Forex Kickstarter course as well. It's all available for free too. All right, so let's get into the US dollar now. And we've seen after some recent selling, the buyers did come back in and it offered some nice opportunities that were mentioned in the LCMS Traders Club as well. So we did see it bounce off that 92 flat support level. I did discuss that we could see it just move a little bit lower. And, that was, a conservative suggestion, but we frankly saw that the risk sentiment, went to a bit of a risk-off sentiment, was just referring to the NASDAQ and the S&P 500 had some modest pullbacks. And honestly, a reaction like this says to me that, really this is probably the 92 flat level is probably the bottom for now in regards to where it wants to head, because even with that NFP miss, we still saw, frankly, the US dollar didn't really want to move much beyond 92, quickly has rallied back, and they are setting up for some nice opportunities. Now, honestly, there wasn't a lot of news for the US dollar, obviously on Monday with the public holiday, and then yesterday, in fact, there wasn't. It was just a simple sentiment in the market, and that sees that if there's stock selling off, there's a little bit of an unclear, uncertain element to the markets, and that's where some safe haven flows come back into the US dollar here. And a lot of the pairs against the US dollar had been quite extended, and we talked about the Euro US dollar as a sell trade, and now we also mentioned an Aussie sell trade as well, and this was updated in the EchoFin group as well with LCMS Traders Club. But for today, guys, we do have the pound in focus. And like mentioned, we do have a lot of news. So Jin is here just to guide us into, what is potentially looking promising in regards to the pound pairs for this week. And I'll hand it over to you, Jin.
Thanks, Scott. So today, well, first off, good morning, good evening, good afternoon, everyone joining us from all around the world. Today, talking about the pound dollar, quite a interesting position it is at right now. I'll show you the chart straight away before I get into my analysis. The pound dollar on the H4 time frame, it's resisted at 1.3870 through this couple of days for this week. We've seen it retrace back down, possibly towards that 13747 level. Not quite hitting that level at this point, but coming very close. I think that this would be a good opportunity for some trading to happen, especially given what is likely to happen or not happen with the ECB news to be released tomorrow, and then also with some strength gaining from the US dollar at this point. Coming back to the news, what could push the pound dollar in either direction? Here, checking out the ForexTradingAsia.com economic calendar. I'll just scroll up a bit. Today being Wednesday, we don't have much pound news or any pound news at all. Traders Club members, watch out in the platform. I will be doing a quick video in particular for the BOC rate statement, showing you a trade idea that I've been stalking for a while right now. Later tonight, we do have the UK inflation report hearings. One thing to take note at this point is an inflation report hearing is quite crucial towards a central banker making their decision on further QE tapering or further interest rates decision, because inflation is about the speed of growth in the overall economy. So pay attention to that. I don't think this news would bring about any clear direction in terms of where the pound dollar could be heading, but because it is approaching that support level of 137.47, I think we're going to see quite a bit of volatility at that support level. So this is something to pay attention to tonight at 11 GMT plus 8. Following on from that, Thursday, we do have a lot of news from the Chinese, and then after that, the Eurozone as well, with talked about the Eurozone numbers before, but then your attention for the pound dollar, if you're trading that, should shift to Friday, where we do have the GDP number to be released at 1400 hours, was 0.8. There is expectation that it might be at about 0.5. I think that we might see a 0.8 number, or maybe even slightly better. So why I think it might be slightly better is we've seen, despite the situation with the virus, despite Delta, despite all the things, the UK economy has been opening up. We've seen more activity. We've seen them actually being quite positive in terms of activity and opening up the economy. So in terms of the month-on-month GDP number, I think that despite a expectation of about 0.5, we might see a 0.8 or even a 0.9. I wouldn't be too surprised even if it comes out at a 1%. So with that, my expectation might be some upside in the pound dollar driven by the GDP number. And then after that, we have the GDP year on year. As a trader, I'm not too concerned about the year on year number because that is relatively longer time frame. And then GDP number changed on quarter on quarter at about 4.8%, looking like a very good number. And not a lot of other news for the UK. Following on from that, we do have some US PPI numbers, not a big price changer at this point, and then the Canadian employment change or employment data. So with all that, what to look out for in terms of the pound dollar, what you should be gathering here is that we have inflation report later today. Expect the volatility. We do have the GDP numbers to be released on Friday. Possible some upside on the pound dollar. So this translates to, on the H4 time frame here, pound dollar looking like it might come down, test this 137.47 level with that volatility from inflation report hearing today. So I'll move that a little bit nearer. And then on Friday, I think that it will sit there, bounce around this support level, test it. But on Friday, if we do see that good GDP number coming from the UK, we could see that bounce back up again. With that bounce back up, I don't think it'd be an immediate buying opportunity. I think you should be a little bit, look for some safety at that point. Maybe look to buy at about above 1.37464, above 1.3764. You could be looking at a 20-30 pip stop loss for a good 90 pip take profit level towards the upside. That's a 1:3 risk reward ratio towards the upside, towards that resistance of 138.70. This is also with the expectation that, you know, there's a strong pound GDP number, and also that there's no surprises coming from the US, giving it significant strength. If we do see significant strength from the dollar, then we could see it break lower. But I think that with the way the dollar has been doing, I'll show you the dollar index again. We've seen that bounce back up. I think this is a bit of a retracement before possibly coming back down to test at 92 level again. We've seen that bounce back up as Scott was sharing with you. I think that we might see it as a retracement before some testing of 92 again. So that might actually mean that it might play quite nicely for the pound dollar to test 137.47. What I didn't do yesterday was look at the euro pound. So if you expect the pound dollar to come down and test before bouncing back up, expecting the pound dollar to go up, coming back to the euro pound, we could anticipate that as pound dollar climbs, the euro pound could be tracking back lower. Another reason why I think that the euro pound could be tracking lower, as I zoom in a bit so it's easier to see, you see that big tail, that big rejection of that 86 level. So 86 is about there. You see that big rejection of the 86 level because of this one candle. So I think that we might actually see it test that 85.80. And if I zoom out again, test at 85.80, And if it does break because of the pound dollar tracking higher, we could see it break lower, right? So at that point, what you could be looking for is selling opportunities below 85.75. You could be a very tight stop loss of, even 20 pips, the take profit of 20, 30, 40 pips here towards the downside, but you're looking at, it needs to break below that point before you could see the 85.38 support level being tested again. As the pound dollar climbs, what you also need to see for this euro pound to track lower, to break that support and track lower, would be for the euro dollar to move down towards that 1.1766 level, as we spoke about yesterday, right? So very briefly, we looked at the pound dollar, we looked at the euro pound and the euro dollar as well. What I want to do is a quick preview about what I will be talking about tomorrow. The US yen, we've already seen from my analysis last week that it came down, tested that 109.76, tracking up towards that red line of 110.33. At this point right now, it's going to be quite interesting. A couple of trade ideas to be shared with you tomorrow, but that's all I'm going to be telling you. To make sure you tune back in tomorrow. With that, I'll pass it back to you, Scott.
All right, thank you, Jen. And just a quick recap again, just for everyone in the chat. So we've got a few links that have been shared as well. I noticed there was some conversation about Gim Hong's ongoing New Zealand Swiss trade as well. So if you're still in that, he is still holding the Kiwi Swiss trade. And again, there was a link as well, just on the Traders Club that will get you into the club as well. Just follow the prompts once you click that link. And then we've also got the Forex Trading Asia article that Gim Hong just shared on the pound Kiwi as well. So his thoughts on that. And also, I just found an example video just in the YouTube channel about an Aussie trade as well. So in the Forex trading course on YouTube, we actually show, Jin goes into detail about how to apply the 5 steps into an actual trade as well. And I found that quite informative as well. So excellent. Zoom user, that's great about the notes. So anyway, coming up next is Daniel, and he's just going to go into a bit of a preview of tonight's live trading call. This is really the main event of the week as well. It's Wednesday night. There's typically quite a lot of liquidity and movement in the market. And over to you now, Daniel.
Hey, thanks, Scott. Yes, exactly. So, for everyone who's in the LCMS Traders Club, remember, we have on Monday at 8 p.m. Sessions, we have a group coaching sessions where we see what's going to happen for the last week and what's going to happen this week, where we prepare our trades, ideas, setups, and preparations, like what we have for those who have joined us. Already the Aussie USD and the Euro USD has been activated. Now, tonight at 9 p.m. GMT +8 time zone, we're going to have a live trading session. Right. So, a lot of complaints for people, with traders coming in. They have no time to trade. So they can't take any trades and no time to prepare. So, this is a live trading session on Wednesdays. Liquidity is high usually at the US market open. We have a live trading sessions together with all the club members here, where we show how to prepare to quickly do our preparations. I mean, we've joined in the morning call. That's great. We have already prepared already. You've joined on Monday. Group coaching sessions, but Wednesdays we come in live together to quickly prepare our trades, know what you're doing, and then straight away we can trade together and be profitable, right? So tonight is going to be very interesting because we have a couple of news already happening there, and then at 10 o'clock we have Bank of Canada session, right, where we talk about the monetary policies. That's going to be really very interesting. So I will encourage everyone to join. We'll trade together, we prepare again, we'll wait for Jin's Bank of Canada's videos coming up, and we'll prepare on the spot, getting ready for the 10 p.m. for 9 to 10 p.m. with live trading sessions. And so you also be ready for the 10 o'clock Bank of Canada monetary policy news trading time. Okay, so now if anybody is interested to come in, you're already in the LCMS Traders Club, do come in at 9 p.m. tonight at GMT +8 time zone. Now, if you're not already with us, I would encourage you with the club. I would encourage everyone down here to to join us at tradersclub.lcms.com.sg. Coming in, going in, you can see that actually not only this club, we have the group coaching sessions, we have lots of trade ideas. You can see in the chat, lots of trade ideas happening there for both the short-term, medium-term, and the long-term trades coming in. We have also the Forex signals. We have the analysis for the Forex signals. And we're on morning, we have the daily analysis here as well. So really lots of information, very beneficial to you. All this for only $49 a month. Wow, this is without a doubt the least you have to do to achieve your best in trading. So you can see so many people already benefited from them. $49 a month is easily recoverable. Just click on it, join us. And tonight, I'll see you at 9 p.m. Scott.
Thank you for that, Daniel. And most definitely, guys, it's worth getting into the club. The learning experience is just really made that much quicker than doing it on your own, because there's just so much information out there. You can really, it's a full-time job just watching YouTube and sort of just getting lost in it all. So please check it out. And that is the end of today's episode. Thank you so much for watching. And again, we'll see everyone tomorrow for the yen and gold. And I hope everyone has a lovely rest of